100 rate with your weekly mortgage minute. Today is Wednesday, September 24th, and the August numbers for home sales went skyrocketing higher. It went up 20% month over month and over 10% year over year. Now remember, these numbers are for August, and that was even before interest rates were impacted and decreased. So what was the reasoning to it? We're not quite sure, maybe pent-up demand, but either way, we're going to take it, and we're going to hope that this carries forward into the existing home realm. So let's look at the home sales. Well, there are 800,000 units, which is the highest sales pace since 2022, which is up 21%. Now, considering the revision for last month, it's actually 23% up from the original report, and it's up 15% year over year. Some folks out there are talking about the fact that the reported month supply dropped dramatically, as you can see on this chart, from 9.0 to 7.4 months. And so they're thinking inventory levels are coming way down, but that's not true. Inventory levels came down a hair. And you have to understand, guys, you calculate month supply by taking for sale inventory and dividing it by the monthly sales pace. So as you can see, there is an enormous jump in the sales pace numbers from July to August, and that is why the reported month supply went down. So completed units are at 124,000, and so the difference between the completed units and for sale inventory are those that are either under construction or not started. And this is a good number. It is only 1 month, so we don't know if this will continue, but it is a positive and encouraging sign. We do just need a few more consecutive reports to really see. Now tomorrow, we will get information on the existing home sales market, so that will give us a little bit more of a clue of what to expect. We did see some strong housing news from the mortgage application data. So total application volume is at the highest level now for 2 weeks in a row since 2022, and 60% of the transactions were refinances. Refinances, though, were only up 1% compared to the previous week, and purchases were flat. But you have to remember, the previous week, we saw a monster jump. So the fact that application levels stayed at these levels is actually very good. So let's look at the application volume this time last year. And you guys, that is when rates fell. They were actually almost 0.25% lower than where we are today. But as you can see, you can look at how much more application volume we had. And this also speaks to this pent-up demand. If you look at the household informations, you'll see that for a very long time, 5 years or so, they were averaging 1.8 million. And you can see the formations have dropped off. But what this chart is really showing you is that there is so much pent-up demand on the sidelines, which is ready to go when rates drop. Now, if rates remain down here, guys, I think the purchase environment is going to get much better. So that is it for today, Wednesday, September 24th, and I will be looking forward to chatting with you next